Have you ever looked at your financials and thought, wait, we made money this year, so why is there barely any money in the bank? If that sounds familiar, you're not necessarily doing something wrong. For construction companies, there are several reasons why your financial statements can say profit while your bank account says, where did all the money go? And today, we're going to break those down into the 4 biggest ones. Number 1, your revenue isn't the same as your cash. Let's say you have a project where you've earned $200,000. That sounds great, but earning $200,000 doesn't necessarily mean $200,000 sitting in your bank account. You may have work that's been completed but hasn't been billed yet, or you may have invoices that have been sent but haven't been paid. Meanwhile, your payroll, suppliers, subcontractors, and other expenses still have to be paid. So, the thing to understand is profit tells you how the business is performing. Cash flow tells you when the money actually moves. And that timing matters a lot in construction. Number 2, you may not be looking at your WIP, which stands for work in progress, and if you're running multiple construction projects, this is one of the reports you need to understand. The WIP schedule compares how much you've billed with how much the work you've actually completed. Because here's the problem. If you simply look at invoices going out, your financials can give a distorted picture of what's really happening on your job. Number 3, you could be overbilling or underbilling. Let's make this very simple. Overbilling means you've billed more than what you've actually earned based on the work completed. That can make your bank account look great, but here's the catch. That money isn't necessarily profit. Some of it may represent work you're still obligated to complete. On the other hand, underbilling means you've done more work than you've billed for. That's a completely different problem. You've already earned the money, but you haven't asked for it yet. So you can end up with a contractor who feels busy, profitable, and completely confused about their cash. That's why tracking billing against actual progress in each job matters. And number 4, then there is retainage. Let's say 5% of your payment is being held until the project is completed and accepted. 5% might not sound like much, but when you're running multiple jobs, that money can add up quickly. And because it's not sitting in your bank account, it's easy to forget about, but it's still money you are owed. If you don't track it properly, you can end up stressing about cash while a significant amount of money is sitting in receivables waiting for collection. Sometimes the problem isn't that your construction company isn't profitable. The problem is that you don't have a clear picture of where your money is, where it is coming from, and what obligations are attached to it. That's why construction accounting isn't just about categorizing the transactions. Your books should help you answer questions like, which jobs are actually profitable? Are we overbilled or underbilled? How much retainage are we owed currently? Because if your company is profitable on paper but broke in the bank, you don't need to guess where the money went. You need financials that tell you the whole story. If you want to know whether your books are actually giving you that picture, reach out to Ceiba Accounting for a free book review to see where you're at.